BNPL, buy now, pay later. It's not a new concept. In fact, it's been around for ages. But the BNPLs of 2025 are slick, they're easy to use, and some might say they're cute. Thank you so much for joining me here today at Sisters for Financial Independence. My name is Catherine Agapjan, and here at Sisters for Fi, we cover money topics to help you get savvier with your money. Today, we're talking about something super important that's popping up everywhere. Buy now, pay later, or BNPL. You've probably seen it, and maybe you've used it already. It's that little option at checkout that says pay in 4 easy installments. Now, BNPL isn't inherently bad, but it's a new way of spending that's quickly changing how we think about money. It's normalizing this new way of consumption. And if we're not careful, it can get out of control fast. So today we are going to break down what BNPL is, how it compares to credit cards, the specific traps of this new kind of payment structure, and how it influences rampant consumption, and most importantly, how to stay in control of your money when you're using it. So what is BNPL? These are mini loans that lets you buy something right now but pay for it later, usually in a few fixed installments, but often without interest if you pay on time. Companies like PayPal Credit, Afterpay, Klarna, and Affirm are the big players here. And you now see their buttons on majority of e-commerce websites. The appeal is huge. You see something you want, and instead of dropping a big chunk of cash at once, you can spread it out. It feels like a convenient little financial hack. It feels small, manageable, and sometimes even free because you're not paying interest. Many of us have likely used some kind of installment services before. I certainly did when I first moved to my first apartment. I really wanted a big girl TV, and so I found one at Sears, but I didn't have good credit back then. I was just starting out. So I applied for their interest-free credit card, and I put myself on an installment plan to pay off that TV. So I spent a whole year diligently paying off that TV. It was a luxury item that I wanted, so I had to jump through a few hoops to get it. But today's buy now, pay later program are a little bit different. They're so seamless, they're so easy to use, and a lot of it is fueled by emotional marketing. So you might be wondering, isn't BNPL just like a credit card? Not exactly. Both are forms of debt. There are a few key differences. The first one is a credit check. For a majority of BNPL purchases, there might be a soft credit check, which verifies your identity, verifies your residence, and verifies some sort of income. But no one is really checking to see if you can afford smaller items. And for credit cards, you do have to qualify to get a credit card. So you have to jump through a few hoops to even get one. They check your credit history, get proof of income, and generally have a practice in place to see if you would be a good borrower. If you are not deemed a good borrower, credit card companies either deny you a card or set a lower spending limit for you. The second big difference is interest. What makes most BNPL appealing is that if you pay your monthly installments on time, there is no interest. That's a win for you. You are not shelling out extra money to get what you want on interest. You're just spreading out the payments. For credit cards, if you start carrying a balance month to month, interest starts accruing on your entire balance. The third difference is credit building. While paying your credit card bill on time builds your credit score, most BNPL payments don't help you build credit because they aren't regularly reported to the credit bureaus. At this time, not all BNPL companies report, but this could be changing. There's still a lot of gray area, and sometimes they'll only report the negative stuff, like any time you miss your BNPL payments, and those missed payments can still hurt your credit score. BNPLs have less regulation, less credit checks, less hassle, which can make it dangerous territory for a lot of people. Now, BNPL feels less formal and often interest-free upfront, But that ease can be a double-edged sword. Now that we understand a bit more about BNPL, let's look at some of its hidden traps. The first one is that it disconnects you from you and your money. BNPL as installment plans is not a new concept, but it has been beefed up thanks in part to social media, online shopping, and cloud technology that make shopping checkout seamless and quick. No thinking necessary, no friction, just tap and buy. Now, buy now, pay later has also been integrated in so many e-commerce websites that a simple tap will get you access to the installment feature of PayPal Credit, Affirm, or Klarna. When you first set this up, you will enter your debit or credit card details into the BNPL site, not the site that you're purchasing from. So at this point, all you're seeing are buttons to continue your purchase. The concept of money starts fading away in the background, and this makes the pain of paying disappear. Behavioral economists describe the pain of paying as the psychological discomfort that people feel when they part with their physical money. Because digital payments lack this tangible emotional friction, it can lead to increased spending and impulse buying. That feeling of loss is reduced when money is simply a number on a screen or a two-button tap. In a study published in Behavioral Science titled Spendception, the psychological impact of digital payments on consumer purchase behavior and impulse buying, dives a bit deeper into how digital payment methods like mobile wallets, credit cards, tap to pay, online banking, and buy now, pay later lack this tactile element, creating psychological detachment from spending. So think about that the next time you purchase your BNPL. If you had to actually let go of $20 each time, how would you feel? Would you think twice about buying that item? The separation, digital and delayed, makes it easy to overspend. Now, if you have not realized by now, all of these things have been by design. There are literally millions of people working to make that buy now, pay later button visible so that it's easy for you to add things to the cart and you don't feel the pain of letting go of your money. It makes spending easy and increases consumption. The second trap we all need to look for is that many of these BNPL companies know exactly who's most likely to use their products. They're young Gen Z and millennials, mostly female shoppers, digital natives, those who are constantly on social media, and they are using this to their advantage and marketing directly to them. The Federal Reserve found that women are 68% more likely than men to use buy now, pay later services. Because women drive the majority of online retail spending, especially in categories like fashion, beauty, and home decor, many of these BNPL companies are specifically targeting female shoppers. They're leaning hard into emotional marketing, and they're partnering with a lot of brands and retailers that cater to women. And they use language like little payments are so much cuter to make the debt seem harmless and trendy. You might have seen ads for "you deserve this, feel good, pay later, no interest, no guilt." They're not selling you a payment plan, they're selling you a vibe. So much so that in an article from The Atlantic, many female shoppers are being pushed to use BNPL services, and this kind of debt is now referred to as cute debt. Small, manageable, and maybe spent on things that are cute, that are fashion, that are beauty. And unfortunately, it all goes back to aspirational spending, which is when you spend money on items or experiences that reflect your future goals or the lifestyles you want to achieve, rather than your current financial reality. There's been a lot of articles being posted about this concept of cute debt and about people living life of luxury but not reading the fine print when it comes to these BNPLs. Unfortunately, for some of the people that have been profiled in these articles, BNPLs has led to thousands of debt. It gets out of control fast if you are not careful, living outside your means because the small payments makes them seem manageable. Let's be real here. The system isn't just about helping consumers get what they want. It's about helping retailers sell more stuff. When BNPL is added to e-commerce sites, it increases average order values by 20 to 40% because people buy more when they can split payments. That's why you see BNPL buttons on your favorite websites. Target, Lululemon, Urban Outfitters. They know it boosts conversions. And those companies, they pay BNPL providers to get you to spend. Revenue for BNPL companies comes primarily from fees charged to merchants that accept BNPL. The business model of buy now, pay later companies is not really about selling their services to women directly. It's about selling themselves to the retailers that want to sell things to women. Lots of online shoppers load up their carts, but once they see the total cost, they don't follow through. Companies such as Afterpay pitch themselves to merchants by promising to solve this issue of cart conversion. Shoppers are more likely to click pay now if they have the option to pay less upfront. They are essentially telling brands, we can get women to spend money here. The next hidden trap you need to look for is debt stacking. Because it feels so easy, it's tempting to use BNPL for multiple purchases. You buy a jacket with one service, headphones with another, or maybe a trip with a third BNPL service. Those small payments at some point will stack up and become a huge chunk of your monthly budget. And if you miss a payment on any one of those, the late fees kick in and things get expensive fast. The Federal Reserve warns that people using multiple BNPLs often overextend their budgets because these payments feel invisible. And that's the real danger here. It doesn't feel like real debt. It's friendly, it's cute, it's small, it's pink, it's manageable, and it comes from an app. So you might start forgetting that it's debt, but it's still a financial obligation that can snowball if you're not tracking it and being diligent with its payoff. In addition, if you are using BNPL, there's a likelihood that you are already experiencing a budget crunch, whether it's student loans, car loans, or just a general increase in prices. All of this, unfortunately, can lead anyone to be in the red quickly. This is especially easy to do for low-cost or trendy items like clothes, makeup, or gadgets. You might have already worn, used, or even forgotten about them by the time the payments come through your accounts. It's easy to forget that you still have to pay for it in the future. The next hidden pitfall you want to be looking out for when you use BNPL services is called phantom debt, and it is a term for debt that you have that doesn't show up on your main credit report because many BNPL loans are not reported to the major credit bureaus. That means you might not realize how much debt you've truly piled up. Even worse, if you go to a bank to get a big loan for a car or a house, you look great on paper. You might have this huge pile of BNPL debt waiting to sneak up on you. That lack of transparency makes it risky for yourself and your future. And the last hidden trap that you'll want to look for is the lack of regulation. Because many BNPLs position themselves as short-term installment plans, they can float in a regulatory gray area, skirting not only the Card Act, but also other rules like the Truth in Lending Act, which requires loan-based financial products to provide clear and intelligible language around interest rates, fees, and repayment if the loan period is longer than 4 months. Because there is a relative lack of guardrails around the BNPL industry compared to other financial services, it can be easy to get caught up in the gray area. No one is really protecting you when it comes to BNPL debt. So right now, it is up to you to understand what you're getting into when you are signing up for the BNPL services. Hopefully, the regulation will catch up soon, so at least there's some protection like we do with credit cards and other financial services. So how do you stay control when it comes to BNPL? BNPL is going to be here to stay, so you need to create some strategies for yourself so that you use it in a way that benefits you instead of the other way around. The first thing is you need to understand that this is debt. It's debt that takes a few months for you to finish off, but it is a real financial commitment. It's not free money, so make sure you fully understand that. The second is make sure you budget before you buy. Can you comfortably afford all the installments for the next few months? If not, save for it instead. No matter what, these payments need to be counted in your budget. So set spending boundaries. It can be easy to say, I can afford this monthly payment today, but the future might be different. You could have an emergency, you could lose your job, and there could be so many other factors that might impact your future cash flow. So make sure you understand what that means when you sign up for these monthly installments. Monthly payments are a lie because they can make it seem like things are affordable, that you can have anything that you want because you can pay for it in monthly installments. But the one thing that monthly payments do not consider is the risk of the future. Sure, you can have the income this month to pay for your monthly payment, but what about next month? What about 5 months, 12 months from now? A lot can happen, and many of us are not really thinking about those other months. We're just thinking month to month. And I get it, our income acts like that, but if we are only carrying on a month-to-month basis, it's going to be hard to get out of that cycle, and it's going to be hard to finally save and invest for the future that you deserve and that you should want. My third tip is to use 1 or 2 at a time. We probably can't get away from using BNPL, so try to limit yourself to 1 or 2 active plans at a given time. The more you have, the harder it is to track, and the more will come out of your monthly budget. So keep that in mind. Fourth thing is to track your BNPL payments. Write down all of your due dates in a calendar and set reminders on your phone. Missing a payment is the fastest way to get hit with fees and then have interest added. That's a double whammy and you don't want that. Next is to remember the emotion behind the buy. Are you purchasing because you want it? Or is there some kind of feel good that is happening with what you're purchasing? It's so easy to put things in the cart, come to the checkout, and still proceed with buying those items. But it might be helpful to take a pause and a breather to see if what you are buying is necessary. BNPL companies thrive on emotion-driven spending. So pause and ask yourself, would I still want this if I had to pay for all of it today? BNPL is creating this new kind of constant consumption. There is no breaks. There is no stopping. If you want it, go get it, worry about later. And that can have a detrimental effect, not only on your finances, but also on your mental well-being. In addition, BNPL is also creating this sense of entitlement. Of course, you and I deserve good and nice things, but we need to be careful about equating BNPL as I deserve this no matter what. I deserve this, I'll worry about later, because that also has an impact on the way we view ourselves and the way our future finances will reflect on the life that we want. The next thing is to make sure you read the fine print. When you sign up for a BNPL services, you are entering into an agreement that you will pay them back. So understand the payment schedule, what the late fees are, and any other charges that might be added if you miss an installment plan. Different BNPL providers have different rules, so know those rules. It can be easy just to tap and check the agree button, but you want to understand what it will entail if you do miss a payment with your plans. 7 is to establish new spending habits. BNPL offers features designed to increase its attractiveness and habitual use. They want this as part of your daily routine, and it's easy to get into the routine to buy, tap, and pay for it later. But it also means that you are constantly in this cycle of payments, and you want to see if that's really going to help you now and in the future. And lastly, don't forget about your other debt. It's easy to focus on your BNPL payments because they're small and you likely want to keep paying so you can get more installment plans. But if you have other debt like car loans, student loans, or a mortgage, do not let those get into delinquent status. Yes, you will have to shell out larger amounts to pay for those loans, but it's super important that you get ahead of those other debts so that you are not putting yourself in financial jeopardy. I want to address something specific when it comes to using a credit card to pay off your BNPL plans. Many accept credit card as a repayment option, and others will accept bank accounts. Now, if you use a credit card, you absolutely need to understand the risk that you're taking. If you somehow default on your BNPL payments, it means you will get charged a late fee from the BNPL service provider, as well as the interest rate charge of your plan. And if you're having a hard time paying off those installment plans, that means when you go to charge that on your credit card, you likely also will have a balance on your credit card. So now there is a triple whammy of fees and interest being attached to what you have just purchased. This means that what you bought ultimately has now cost you a few more dollars because you have missed a payment as well as incurred interest. There is a risk that the credit card you're using to pay off your BNPL loans could be maxed out and your BNPL payment could be rejected. So it's super important that you get diligent with tracking what you are putting on your credit card as well as what you are taking on as far as BNPL loans. BNPL is here to stay and it can offer you a lot of flexibility. But please understand this is still debt, just debt that you're kicking down the line, which will impact the way you live. I'd love to know your thoughts on buy now, pay later services. Have you used it? What are your best tips for staying in control? Let me know in the comments. And if this video has been helpful, give it a like and share it with a friend. And don't forget to subscribe to Sisters for Fi for more money content. I am the oldest sister here at Sisters for Fi. I'm also an older millennial, so I understand this concept of waiting. We waited for our favorite song to come on the radio instead of going to Spotify to play it. We waited for our birthday or Christmas to get a new toy instead of having our parent tap on Amazon and get something the next day. Now, understandably, it is 2025 and many of us no longer need to wait. But waiting does something to your brain. It changes the way you think about things, and it also puts you in a more patient mood. That way you're not constantly wanting things now, wanting to consume things. So if you are having a hard time with waiting for something, it might be time to just step out of your digital comfort zone, get off social media, change the way you're thinking so that waiting becomes a habit. It becomes a part of you instead of the constant that instant gratification that your brain is searching for. I have a few videos here at Sisters Forfeit to help you. You can start with digital minimalism to help you with your digital detox. And if you are having issues with some of your spending, I'm going to recommend this video, which offers you some tips to help with your spending triggers. Thank you so much for tuning in, and I will see you in the next video. Bye!